85% of potential home buyers are sitting on the sidelines right now waiting for interest rates to fall. And we've all heard that the Federal Reserve started to cut interest rates. And so everyone thinks that, well, I'll just sit around and wait and eventually rates will go down much lower and I'll be able to buy a house. The problem is that the Federal Reserve does not directly control mortgage interest rates. They just tend to trend in the same direction. And while it's true, they are starting a rate cut cycle, the road to that lower interest rate that would prompt most buyers to take action, which is rates below 6%, is going to be gradual and could even be bumpy. Meanwhile, leaving huge opportunity on the table for you. So I wanted to focus real briefly today on things that you can control when you're going to buy a house. There's multiple things, but there's two in particular that are key. And the first one is credit scores. Credit scores have a direct impact on the way loans are priced. I want to give you a quick example of a loan level price adjustment by Fannie Mae. These are called LLPAs by credit score. So it's loan level price adjustment by credit score / loan to value ratio. So for loans greater than 95% loan to value, so in other words, 3 to 5% down, if you look with a higher score of 780 or above, see those percentages? Those are adjustments to the interest rate or the cost of the rate. And 760 to 790, see how they're a little bit higher. And as you can see, as your score goes down, they get higher and higher. And so one of the key things to do is to make sure you're optimizing your interest rate. And let me explain how to do that. There's all sorts of tools out there, but none of them really work that well on the consumer level. What you have access to at Credit Karma or other applications will give you a score, but it's not a mortgage FICO score. So the best way to optimize credit is actually to get with somebody like myself, do a soft credit pull, and then analyze the report. I have tools that'll show exactly what to do and the time frame in which to do them with, and they're all free, by the way, for a consumer to take their score from, say, a 640 up to 700 or 720 or 740 to get a better score. Second thing to focus on is working with the right lender and the right lending team, because the type of loan also matters. So for example, a conventional loan has higher interest rates than an FHA loan. And it gets into details of pros and cons for each particular loan. But the reality of it is FHA has much lower interest rates. If you're a veteran, VA loans have much lower interest rates. And so working with the right team to take care of the things you can control, so you can control your credit score in the sense that you can take steps to improve it. And some of those steps, it happens immediately. And the second thing is you can control working with the right team and selecting the correct loan product that also gives you the lower rate. And what that does is it'll give you the maximum affordability within your budget. I also like to say the third thing, which is what you can control, is setting a budget that is affordable and sustainable. Most people, when they say, oh, interest rates are too high, it's an objection, but not based on any kind of math numbers, or you're running the numbers on some online calculator that's probably not accurate. As a certified mortgage finder, I know the exact ratios that you should be in as in terms of your housing payment as a percent of your income, what's conservative, what's sustainable, what's a stretch goal, and what's too far. And that is how I can help you zero in by maximizing your score, picking the right loan product, and then getting that payment just right. You can afford to buy a house today at a time where there's very little competition from other buyers, and therefore getting price and closing cost incentives to your advantage. My name is Todd Baker. I'm a certified mortgage finder. Please feel comfortable reaching out and connecting me if you'd like some help, and I hope you have a great day.